Good morning, ladies and gentlemen. Thank you for joining us today for our webinar titled Tackling ESG's Biggest Challenges in the FSI Sector. Special thanks to the speakers for sparing the time today and InterSystems for sponsoring this webinar. Now, 39 countries and over 2,000 jurisdictions, which are home to a billion people, have declared a climate emergency. The successful transition for corporations towards ESG principles could very well prove to be a watershed moment in humanity's history, in that the financial sector plays a major role. This transition, however, is not as easy as flicking a switch. It requires an overhaul of culture, operations, and even business models. Joining us today to discuss this very important subject, right on top there, we have Paul Ark, who is the partner and head of ESG for Gobi Partners. Below Paul, we have Huishi, who is the senior vice president for sustainable business under the corporate sustainability office in UOB. Below Huishi, we have Kenneth. Kenneth is the country lead for InterSystems. And below Kenneth, we have Inmoo Hwang, who is the chief operating officer of Addx. Folks, welcome to the show. Thank you for joining us. So maybe we'll start with a broad question and we'll start with Paul on top there. Paul, can you walk us through what is the progress that we've seen in the industry in terms of the ESG movement so far?
Sure, and thank you very much for having me, Vincent. I think ESG in general still, ESG has been around as an investment principle, but it's still, it's still sort of climbing up that curve of momentum. It's still largely, a niche framework, particularly here in Asia. There's certainly a lot of debate and controversy in more developed markets about it. But if we look at where the startup space and the fintech space is specifically, ESG is really only just at that front door, kind of scratching to get in. So, I myself had worked in fintech as a venture capitalist, and in my years managing a fintech fund, we almost never spoke about ESG. There were some discussion around, banking the unbanked, and that's about as close as we got to kind of the social aspect of ESG. But we didn't really spend a whole lot of time talking about the climate aspect. And perhaps there was probably more discussion on governance as we were thinking about, just how we do KYC, and now in the crypto space with a lot of these sort of scams and rug pulls, there's definitely a lot more interest around governance. But that said, ESG is still very a nascent movement in the fintech and startup arena.
And even within the VC space, would you say it's still quite at its infancy? Because I don't really see a lot of VCs with a title like yours, right? Head of ESG.
Very much so. You bring up a great point. I think ESG has ESG is more ingrained in different sorts of asset classes, probably more in public equities than in private or even VC. If I look at venture capital in Southeast Asia, there are probably only three institutional VCs that have a ESG professional within them. And then, as you mentioned, I'm probably one of them. There are a handful more that are looking at ESG, but are really just sort of tacking it on to an existing VC professional. But that said, I can definitely see, the wave coming. There's definitely a lot more momentum around ESG within venture capital in Southeast Asia.
Perfect. Thanks for that overview, Paul. Let's move on to Huishi on the banking sector now. Of course, we've seen a lot of developments in Singapore from announcements with Mars and various industry initiatives. Maybe you can walk us through some of the key developments that you've seen within the sector for ESG.
Sure. Thank you, Vincent, and very happy to be on this panel. So I speak from a bank who really banks the main economy. And here at UOB, what we see are really three major trends. if you have been following the market, the pressure for actually banks and financial institutions to pledge to net zero and to really channel capitals to finance the 17 UN SDGs has really picked up momentum in, say, the last 3 or 4 years. And if you look closer to home, where we have MAS, they have started also engaging the banks and the financial institutions around ESG risk management, around the kind of sustainable financing products that we can offer to the companies in the main economy. And the third point that I think is a major trend that we see here is really, if you look at the bank books of what the banks have been financing, we do see increasing momentum of companies asking for sustainable banking products. So, and in response to this, as a bank, we have actually put forward frameworks to support companies that are pledging to go green. For example, the circular economy, our smart city frameworks, where we have a range of different products for companies who are actually taking steps to go towards to start their ESG journey.
Very, very cool. Thanks for giving us a sense of that, Huishi. Maybe just a quick follow-up question before we move on to Kenneth. Now, I think almost unilaterally, we're seeing more expansion into sustainable financing from banks all around the world. But is it possible right now for the industry to move away from financing non-sustainable activities? I mean, are those uh, I guess my question is ESG and profitability a diametrically opposed kind of thing?
I don't necessarily think they are opposed. What you're seeing here
Mm,
is an economy, an old economy that has been,
mm,
if you like, developed using fossil fuels technologies into where we're moving towards a new economy that is of low carbon base, and we are in that process of transiting, right? So
mm,
if we want to transit, what we should be talking about in this journey of trying to get companies move towards the low economy society is actually how can we make sure that as we finance, that
mm,
financing
mm,
supports the development of the main economy and at the same time
mm.
achieve the objective of moving towards a low carbon economy. So in the banking sector, I think we have often heard this what's called a just transition. How do we actually go about achieving a just transition? And this is a conversation that we'll probably hear a lot today on how can we actually define the parameters that enable us to move towards that as an outcome.
Sure. Thanks for indulging my additional question. Let's move on to Kenneth. Now, Kenneth, InterSystems, you guys provide data solutions, so your angle for this might be a little bit different. Maybe you can give us a sense of the development of the ESG space from your lens.
Okay. Yeah. Okay. In the system is a data platform. So thanks, Paul and Rishi mentioned about VC and financings. So before investment and financing, we have a lot of again a lot of data source that coming in to enable decision making. So for technology wise, I think we really need a very robust platform to ingest all the data that required for data lead decision. So a lot of um, organization they have loaded of data, but they are unsure what the data source is always a biggest challenge. So and a lot of time we also need to ingest real time data for offline processing. So data point of view for ESG is like we really have a lot of information, and ultimately it need to be outcome based. What the VC need to look at, the what data or reports that the bank require. So a lot of time is we are always talking about classification of data that coming in. How how robust is the platform able to do classification in order to produce a clean and good data for the researchers, analysts, or even the banking or government. Yeah.
Thanks, Kenneth. And I think to your point, a couple of days ago, even the Monetary Authority of Singapore's managing director said that ESG data is the foundational issue that needs to be solved in order for the industry to be able to transition, right? So there's a lot of key points that maybe we can dive a little bit into in terms of data challenges that the industry faces a bit later. Thanks, Kenneth. Let's move on to Inmoo. And I think, it's good that we have quite a diverse panel. We have a VC, we have a banker, we have a fintech, and also a data solution provider as well. Now, of course, Inmoo, you guys, you do have some products in this space, which I find quite interesting. Maybe you can walk us through, like, what are some ESG trends you see from your perspective?
Yeah, thank you, Vincent. So as a fintech platform, we are the investment platform providing access to the private markets product. So for us, the angle is more around looking at what is the investors' appetite toward this kind of ESG, so-called ESG related product. Since last year, we have been launching a couple of ESG related product. We have an ESG fund from the Hanwha Asset Management Company. We have worked with UOB to launch a couple of sustainability linked bond coming from Sembcorp and Singtel. We see, the reason why we have been working on this kind of ESG related project and originating this kind of product is also because there has been growing demand, a lot of the conversation happening with our investors that they are asking for this kind of product. They want to look at the ESG related product and so on and so on. So the really clear trend is that, even in a recent survey result from the Amundi and the British Times, it's very clear that people are aware these kind of ESG products are important, and around half of them has already put some money into this kind of product. So I think it's really very clear is that investors are very much like to look at this kind of product and because they believe this is going to be the benefit for them, also at the same time benefit for the overall economy as well.
Thanks for that, Inmoo. And on that note, I am curious though, what is the demand from retail investors when it comes to ESG products? Because we see high demand in institutional investors and whatnot. How is demand from the retail side of things?
I guess it's a bit mixed. When I say it's a bit mixed, is that when it comes to the interest, when investors are coming to us and asking about the ESG related product, impact funds, and so on, almost everybody, more than 80% of our users approach us and wants to talk about this. But when it comes to actual investment, that's when it comes a bit of difference from the interest they mentioned, meaning that I think the still retail investors, they are looking for higher yield product. So that's where the discrepancies are. But I think because as more product innovation is happening around ESG field, the VCs, private equity, and so on and so on, I think the gaps will close in moving into the future.
I think that's the case, right? For most retail investors, yes, there's interest, but the priority still, like you said, remains with gaining the most yield. And maybe when the product evolves, that's something that could change. Maybe on that note, Huishi, do you have anything to add when it comes to investor demand for ESG linked products?
So for investors, I think we do, as a bank, we do distribute funds, and we have an asset management, UOB asset management, that structures the funds. I agree with Inmoo that with the institutional investors, we do see demands. With the retail investors, we do see interest in these products. But I think what needs to happen is the education bit with the retail investors in order to help them understand their investment objectives that they wish to achieve out of this ESG and the financial goals that they need to have. So it is really an educational process of bridging the two together and then making suitable recommendations to the consumer who is out there looking at how he can make his dollar, how he can actually divert his savings to invest for his future, as well as to contribute to something meaningful from his perspective.
All right, thanks for the input, Huishi. Let's take a step back maybe and talk about how your respective organizations are embracing ESG principles. Maybe we can start with Paul. Other than setting up a ESG unit within Gobi Partners, what are some things that you've done in the ESG space?
Yeah, no, that's a great question. And because we are an investment company, we need to look at how we apply ESG along two dimensions. One,
Mm.
how does Gobi itself become more ESG compliant, both inside the organization, and then the other dimension, which is quite more expansive, is how our portfolio companies become more risk resilient using ESG. So, from that external perspective, that itself really involves really two key areas. One is making sure that when we screen for potential investments, we're looking at companies that aren't bringing in undue ESG risk. So when we look at any investment prospect, we're scanning them for a variety of risks, whether it's financial risk, operational risk, technical risk. And what we're really doing is just layering on additional areas of risk that we're screening for. So that's really not a radical change in how we do our business. We're just incorporating new risks, just as we would with any new industry vertical that we take on. We move into crypto. We're looking at the risks inherent in that business. We go into agriculture. We're looking at specific risks. So that exercise is it's relatively easy. The harder part is what we do after the investment. So how do we work with portfolio companies after we've invested in them to de-risk their operations as much as possible from an ESG perspective? That's a little bit harder simply because most VCs are accustomed to working with portfolio companies in terms of hiring talent, helping them think about product market fit, entering new markets. It's just a lot harder for those that haven't done it before to go into a company and start assessing their environmental impact. To look at the level of diversity and inclusion in their culture. Perhaps it's a bit easier to build in stronger governance because as investors, we're always looking to beef up and standardize processes within a company. So, from Gobi's perspective, we're working on all of those dimensions. As I mentioned, the big challenge for us is how do we work with companies that we've invested in to make sure that they're equipped to handle some of these emerging ESG risks.
And in terms of your portfolio companies, Paul, and looking at across geographies, right? Are there geographies where you find the portfolio companies are more receptive towards applying ESG principles, or are there some geographies that perhaps is a little bit lagging behind? Could you walk us through that?
Yeah, I probably would say there's less differences among geographies as there are
Mm,
among different investment stages.
mm,
So, if you are an early stage startup, whether you're in the Philippines or Indonesia or Thailand, you're probably not spending a whole lot of time paying attention to ESG because you're probably half a dozen people and you're
mm,
struggling to pay rent. And you
mm,
probably don't even have audited financial statements. So you're probably, if your finances aren't even to international standard, you're probably not thinking too hard about ESG risk. But I find that the startups in our portfolio that are a lot more mature, they're series, C, D, they're starting to attract international private equity money. As they become more mature, it's increasingly important for them to focus on ESG because that's what later stage investors are starting to ask for. So our
mm.
job as venture capitalists is to really start working with these early stage startups when they're much younger in their life cycle and get them ready not only to manage the ESG risks themselves, but also to attract later stage capital that is going to make it a requirement that they are compliant and robust.
Okay, thank you, thank you for the perspectives, Paul. Moving on to Inmoo, can you walk us through how ADDX is applying ESG principles within their operations and business?
Yeah. So, I mean, for us, as I mentioned, as an investment platform, providing access to advice on inaccessible product to our users, our focus is more how do we look at this product? How do we classify different product into whether it's more ESG compliant or whether it's not ESG compliant? So, meaning that from the very basic, when we are looking at origination of the product, we actually exclude some of the industry which we don't believe, like things like defense or like drugs. These, I mean, cannabis, and these are the industry we generally reject and we don't accept to be put onto the platform. That is the very minimum, very bare minimum. And the other angle is the ESG product that comes from the asset manager is quite simple, but we actually have a lot of variety of product which doesn't classify themselves as ESG product. But that's where we are actually working with our front office team to actually define our framework around how do we classify different products into different buckets. Some fund may not classify themselves as a ESG fund, but when you look at the strategy, when you look at the portfolio, maybe they have some ESG element inside. So actually, we are going through this process of creating this framework so that we can actually provide more information to our users, our investors on the platform, so that they can have more informed decision when they're choosing the investment product.
Thanks for that, Inmoo. And just out of curiosity, in terms of your breakdown of products that are ESG and non-ESG, what is the breakdown like for ADDX at the moment?
So at the moment, we have, I mean, from the product providers who already classify this as an ESG product, we have 4 different products. As I mentioned, we have 2 sustainability linked bond. We have 1 equity fund focusing on ESG listed company, which is coming from the Hanwha Asset Management. We have a VC fund which is focusing on decarbonization, new emerging tech. So these are the fund which are classified as ESG related product because their strategy is really tailored around ESG. Then the other products are actually, these are the area we are currently looking at. How do we actually bucket them into the different stage of the ESG compliant? We are actually still going through the process. We are hoping to actually announce something in early next year.
Interesting stuff. We'll keep an eye out early next year for the announcement then. Thanks a lot, Inmoo. Moving on to Kenneth. Kenneth, what are some ways that InterSystems have adopted ESG principles, and what are some ways that you help your clients to better adopt ESG in their organizations? Go ahead, Kenneth, you have the floor. You'll need to unmute your mic though. Okay, there we go.
Thanks, Vincent. I think the first key thing that we are moving our HQ from 40 years office in Boston to a new building. So as we know, that old building is actually consume more power than usual. So we have our new building that we construct. It is probably size that is ESG, is green, building. So this is the first key point. Second point is in the InterSystem data platform is always we are a very efficient data platform that we actually require less infrastructure to ingest probably high volume of data. So we are ongoing developing or improving our platform. For example, the global banks are using our system that they actually use probably a fraction of the infrastructure that they require to drive like capital market, stock trading. So we ongoing really refine, improve this. So new technology that we embrace to continue to help and support our user group to reduce resources in terms of carbon footprint.
Okay, thank you for that, Kenneth. And we should give us some insights into how UOB is applying ESG. I mean, you're a big organization. I'm sure there's a lot of steps and practices that could be adopted.
Sure, yeah, it is an ongoing journey, really. So, if I could just break it down into two parts. The first is internally with our employees, what we are doing, and the second part is obviously with our banking products and the way we assess credit. How do we go about doing it? So, I'll start with the first part, which is around employees' engagement and understanding of our sustainability strategy. So, it is really a lot of education, training. Putting up initiatives so that people are really aware of what is going on within the bank and the goal that we are moving towards. And if you look internally, in 2021, we actually achieved carbon neutrality with our footprint. And the next step of our journey is when, as the bank starts to think about going net zero with our portfolio, we then need to update our employees on this international commitment and what does it really mean for the bank moving forward. So that's the internal piece of work that we have been working on. And with the external sort of the business sort of side of things, few years ago, we have started putting in ESG considerations in our lending process. What this means is for every customer that comes to us with a loan, we put them through a screening process to make sure that they meet our minimum requirements before we even start to consider lending them facilities to go about their business. And I think as what Inmoo mentioned earlier, they have an exclusion policy, and it is very much similar at UOB where we have exclusion policies where with certain type of ESG related activities, the bank just simply does not choose to bank this kind of activities.
Mm, mm,
And to encourage people to move on that sustainability journey, we then have our banking products, right? With customers that are actually putting in the extra efforts. For example, they want to go renewables, they are thinking about the next step of their journey, and they have a plan, and they have a KPI, and they have a target. We work with them to structure specific loans that will give them preferential treatment in their loan pricing when they bank with us. So on these two fronts, on one hand, we work to safeguard the risk that is actually in our portfolio as we do go about our lending business. And on the other hand, we try and actually encourage people to start and get on that journey by giving them advisory, preferential pricing. Yeah.
Thanks for that, Huishi. And I know UOB as an organization, you guys do have programs where you work very closely with SMEs to transform their business. I think there's one called Jom Transform, which you help them to digitally transform. Do you see a day where maybe you'll do similar programs to help companies transition to be more sustainable, you think?
This has always been the talk in the office. It takes, yeah. I mean, it is we bang the Bain economy, right? So
Mm,
we have an SME program and we engage with big corps. There are sort of like the startups, the sort of mom and pop shops that we also bank as well. So
mm,
ultimately, if you look from the banking's perspective, and as we try and move our portfolio towards net zero, we need a whole suite of banking products. To suit customers at different stages. And we within the bank, we need to provide the relevant support and advisory to companies on how to get started on this journey. And if you recall my earlier conversation on the fact that
mm,
there is an international momentum to get financial institutions and banks to get to net zero. I think this all plays well into what is our duty as a bank, right, to the international
mm.
community and where we see ourselves playing a part to try and bring everybody together and move towards a low carbon economy.
Thank you for that, Huishi. Um, so let's move on to another topic, and this is something that has emerged recently. I think mostly in the United States, which I find a little bit baffling. And I would open it to the floor to the panelists to choose to answer this question. I think there's a rise of anti ESG movement in the US, and I think they've come up with some anti ESG products. So I'm just trying to get a sense of what your thoughts are on that movement. Do you think it's something that's purely political? Do you think that's something that we will maybe see in this part of the world? I welcome any panelists to take this question. Just unmute your mic and I'll bring you up on stage. Paul, yes, go ahead.
You know, I'm happy to weigh in. in the interest of disclosure, I am an American citizen, and I am a Democrat. So, the fact that I'm a Democrat promoting ESG, I'm definitely one of these woke liberals. That said, I find it incredibly amusing and a little bit frustrating how politicized ESG is, because I think a lot of people have turned it into a us versus them issue, a red state versus blue state issue. When I talk about ESG, I talk about it from the risk management perspective. I'm an investment professional. ESG is about risk management. And so when I see a state like Florida or Texas say that we are prohibiting funds that operate within our state to invest in ESG, that's like telling an investment manager that you can only look at 70% of all the tools that you can look at to manage risk in your portfolio. So we want you to maximize return, but you're going to do it with one hand tied behind your back. And again, the people that are running these states are not, they're not idiots. They come out of Ivy League schools, but they've turned something that is purely financial, purely risk oriented into political theater to score points with voters. And at the end of the day, that hurts the constituents of everyone's state who is putting money into state pension funds that are looking to enhance risk adjusted returns. And so again, it is quite baffling, and it's the same thing. If we broaden that to, climate, I think climate, in a similar vein, has become so politicized, when really at the end of the day, solving the climate problem is really solving, problems for the human race, for society. And to turn it into a political issue doesn't do anyone any good. So, from my risk management perspective, I shake my head and I say, why would you handicap your fund managers like that? Why give a certain number of fund managers access to the buffet and say, okay, you can't touch 20% of the dishes there? It's a bit silly.
It definitely is a baffling scenario. I still am trying to wrap my head around it, to be honest. But the other consideration I'm wondering as well is that, America is, to some extent, still a cultural epicenter, and a lot of people still turn to the US, right? And I see a lot of political trends that happen in the US eventually make its way to other parts of the world, right? So do you foresee that other parts of the world would also push forward anti-ESG as agendas to perhaps appeal to a certain base of voters, and then having certain restrictions now for the fund managers in other parts of the world, you think, Paul?
I would say that in the long term, no. The U.S. is not alone in sort of this rise of radical political fundamentalism. You're seeing kind of the rise of sort of these right-wing politics in other parts of the world. But ESG, as I said, even if it seems quite niche, it's been around for quite a while. I think there are. I think there's been some research out of Bloomberg that indicates that, I think in 2020, just under $31 trillion of global assets under management were invested with some sort of ESG criteria. So that 31 trillion is about a third of global AUM. And that number is expected to go up to about 50 trillion by 2025. So, even if it's still in the minority, it's a very large minority. And this isn't kind of this overnight fad. It has been a momentum that's been building up over the last couple of decades. Actually, the ESG movement largely gained traction in Europe, and then started to spread to North America, and is now coming to Asia. So, in the short term, you're going to see a lot of this debate around ESG and anti-ESG and the politicization around that. But I think in the long term, if you look at financial trends, the finance industry, the ones that are at the forefront, do see it as a risk framework, and so that doesn't go away. As investors, we're always looking for every edge to juice up our returns, to bring down our risk, and so I think you might see some kind of ups and downs in the near term, but I think in the long term,
Mm.
ESG is here to stay.
Thanks for the insights. Certainly very encouraging numbers to hear as well. Does anyone else have anything to add about the whole anti-ESG movement that we're seeing in the States?
And
If not,
Huishi,
yes, Huishi, go ahead.
maybe I'll jump in here, and
Sure.
I think what we are seeing here is really the
Mm,
social sort of considerations coming to the forefront, right? With climate change, it has always been a contentious issue, but with
mm,
the intensification of the need to take action around climate change, what you're seeing with different factions of the whispers that are coming into the public domain is the need on how to balance the different needs of different stakeholders in this space. And and what then this translates into is conversations at the international level on how, for example, development pathways should be in Asia Pacific, for example, in developing economies, in such a way that they are not sort of, the carbon budget for them is not reduced to such an extent that they can't really develop. So this conversations is messy, and I think it will continue for a
mm,
while until consensus is breached on the respective role, or the respective
mhm,
sort of direction that is acceptable to the international community on how countries should develop, and the kind of carbon budget, the share of their carbon budget.
mm,
So I agree with Paul that we will see these conversations continue in the short term, but in the longer term, if we need to tackle the climate crisis, which is an existential
mm.
issue, there needs to be some convergence on this and how to move forward as a whole.
Certainly, and I think you're right in pointing out it's going to be messy, right? I mean, of course, ESG has been around for a while, but even the whole issue of climate change, global warming is something that we've been talking about since what 70s and 80s. Until now, there's still no consensus, although scientists generally agree, but society still has no consensus on a very fundamental issue like that. So that's a lot of conversations to be had moving forward. Thanks for the insights, Huishi. Does anyone else want to add to that before we move on to the next question? No? Okay. Thank you for that. Now, I also would like to welcome the audience who's tuning in today live to ask questions. If you have any questions, feel free to post it in the comment section in the YouTube page there. One of the audience member did bring up that there is a little bit of a movement against greenwashing, and that's also something I wanted to talk about today, right? Of course, the whole rise of the ESG movement is great, but there are instances of greenwashing that we see across industries. Then I'm especially skeptical sometimes when I see institutions with where the ESG initiative is led by the communications and the marketing head. It gives me a sense of skepticism whether it's really focused on just messaging that they're green, or to actually fix the issue. So I wanted to get a sense of the panelists' views on how big of a problem is greenwashing in the FSI sector, or is it not really a big problem in the industry? Again, I open the question to any of the panelists who would like to take this question. Once you unmute your mic, I will bring you up on stage. Paul? Yes.
I'm certainly happy to talk about it. I would say, the idea of greenwashing is not just endemic to ESG and sustainability impact. I think any sector where there is a lot of excitement and a lot of money, there's always going to be a lot of hype, and that's what ESG is. It's hype.
Mm,
And the thing to understand about greenwashing is that there are two types of people that are organizations that engage in greenwashing. One, which is the more egregious one, are those that are looking to intentionally deceive. So you're intentionally
mm,
hyping up credentials and activities that are not true, and you're always going to get that. You see that in companies that label their product organic. You get that in the crypto space and the NFT space. There's a lot of hype in that area. Every
yeah.
sector where there's excitement, there's going to be some sort of hype and some shenanigans. But the one thing to keep in mind is that there are actually a lot of folks that are genuinely interested in doing good and managing their risks, and they wind up greenwashing because they don't quite understand exactly, the scope of ESG, the frameworks, the standards, the data. I am myself am always monitoring our own professionals or our own startups from
Mm,
claiming things about our activities that aren't true, not because we are disingenuous about it, but maybe we don't realize that is, when we claim something to be impact or sustainable or adhering to UN SDG, it may
mm,
be not the case. And so a lot of times it's me, I think it gets back, to the earlier comment that so much about ESG is about education. It's getting everyone on the same sort
mm,
of standard, the same wavelength in terms of definitions. And so that's something to keep in mind. We should always be on guard against outright fraud. But I think the bigger
mm,
problem is just making sure that everyone is educated about what ESG is, and that a lot of the greenwashing is just a fundamental misunderstanding. Uh, and I think a lot of the reasons why we do have some of these problems in the US around anti ESG is because I think
mm,
people misunderstand what ESG is. They see that there has been some improprieties
mm.
or false claims, and then they kind of paint this broad paintbrush against ESG simply because it's still, the great majority of investors are still trying to understand what your definition of ESG is versus my definition, and the lack of a global consensus around what it is.
Mm. A consensus and definitions and also data points as well, right? I think sometimes there's just a lack of good data for ESG as well. Um, Again, that's one of the challenges, and maybe later we'll jump back to Kenneth to talk about some of the data challenges. But in the meantime, Huishi, Inmoo, do you guys have anything to add to this whole greenwashing conversation? Inmoo, yes, go ahead.
Yeah, I mean, actually, fundamentally, I actually agree with what Paul
Mm,
just mentioned.
mm,
I mean, because I mean, I'm also again coming from the investor's point of view. Uh,
mm,
Also, do get a lot of this question around greenwashing when we offer them. When we
mm,
tell them, hey, we have this fantastic impact fund just coming up. The actually, in most cases, the one of the first few questions they start asking is it just a greenwashing? How is it ESG? So I think really the
mm,
question is how can we, as an industry and as a like regulators across the world, come to like better education, as Paul mentioned. Also, the what would be the disclosure needs to be made, how it needs to be clearly stated, so that investors are more informed about the real benefit, real activities around the ESG, rather than just marketing claim. I think that piece is actually very crucial. Uh, because that kind of the common ground would actually give more comfort to the users and investors when it comes when they hear about ESG, and also and then
mm,
with that they can only truly understand what are the real benefit and real benefit of investing in ESG versus the other products.
mm. Thank you for that, Inmu. And Huishi, do you have anything to add before we move on?
I think Imo and Paul has summed it up very well.
Mm,
So as a bank, what when we do want to report our impacts or when we do want to structure our loan, and it does help a lot of our customers, is having a set of harmonized disclosure standards and impact
mm,
reporting matrix. Because our clients, they not only operate in Singapore, they operate
mm,
globally. And as a bank, we have a duty to report to the regulator when the regulator requires us to report certain set of information. And what we are seeing today is varying stakeholders having varying demands of data points, and this makes
mm,
collection and difficult, and a lot of resources is actually put into it. And then along the way, because different stakeholders have different expectations,
mm,
it translates into a greenwashing perception. Yeah.
mm. Yeah.
Mm.
Thank you for that, Huishi. And on that note of reporting challenges, data challenges, let's move on to Kenneth. Kenneth, can you give us some insights on some of the data challenges that the industry is facing? What are some solutions out there? How do we overcome some of these challenges?
Okay. Thanks, Vincent. So, like what Huishi mentioned, what is a good report, and who are able to produce a good report for decision making? like investment or banking. So I think the first challenge it comes from how can we connect to the correct source of data, the incoming and outgoing connectivity. If we are not able to connect to the correct source of data, or the right set of data set, definitely we are not able to produce a really good reports that required by the banks, the VC, or the government. So connectivity is one of the issue, and collecting. We know that now data actually coming in huge velocity, very fast, very high volume. So yeah, correct. So this particular point, we also need a good platform to really connect to real-time data. We understand that some data that are streaming current right now, it may disappear after some time. So connecting to real-time data and to store them for later for offline processing, that will be important. Connectivity, how fast that our platform able to accept this data is the priority that before the analytic can or the analytic or data scientist can help us with the report.
Thank you for that. And I think on the front of data sources, at least some progress have been made, particularly in Singapore with the new Project Greenprint, right? So we're excited to see how the initiative will help to actually improve some of these issues that we are seeing in the industry. Thanks for the insights, Kenneth. Now let's move on to some of the questions that we are seeing from the audience. Maybe we'll start with one from a gentleman by the name of Calvin. So Calvin's mentioning the COP27 is coming up. Taking into consideration the current challenges and developments, he's asking, what outcomes and impacts of the COP27 do the panel anticipate or hope to see for the FSI sector? Would anyone like to take that question? Oops, Inmoo dropped out. His computer sensed that it's going to be a tough question, so I logged him out. I'll come back in. Yes, so the question is, what outcomes and impacts do you guys hope to see in COP27 for the FSI sector, if there's any comments from the panel?
Okay, maybe I'll weigh in on this one. So
Sure.
I think I mentioned earlier that there has been a strong push for FIs to actually adopt net zero. And a lot of the criticisms has been like FIs and companies are committing to net zero without actually laying out plans and without actually communicating actually what needs to be happen. So I think one of the outcomes from COP would be moving in the right direction as companies provide their net zero commitments. What exactly are they going to do, and how are they going to report on their progress? And what is the guidance around from such international platforms on the kind of information disclosures that companies who have made net zero commitments needs to disclose? And I think this itself will help provide confidence to a lot of people around and interested parties that companies are actually moving in the right direction and they're actually taking steps towards implementing their net zero commitment.
Thank you for that, Huishi. Paul, you want to add something as well?
Yeah, no, I'd also like to add that I'd love to see sort of a stronger push around the ability for people around the world to access financial services and to access credit. The one thing that I think people lose sight of is that so many of the UN Sustainable Development Goals are highly interconnected. And so when we think about things like poverty, economic development, climate impacts, they tend to disproportionately fall on women and children. And so, you can't really tackle one issue without tackling multiple issues. And so, I think, enabling the unbanked to have access to credit, banking services, wealth, the ability to start accumulating wealth, actually does alleviate a lot of the problems around hunger, education, healthcare outcomes, especially climate. And so I think there needs to be a stronger push on that to financial services professionals such as those of us here on this panel.
Certainly, I think access to credit is really the key to social mobility as well, right? But the key thing also, I think, to look at is whether or not the access to credit is of predatory in nature. Because the unfortunate thing that we've seen in some markets is that because these people have low credit score and no other providers want to provide them loans, and they start charging rates that are not necessarily ideal. So I think those are good things for
Well,
us to
I think,
yeah.
I mean, that's a great point, Vincent. And I think a lot of it is, part of it is predatory. Part of it is, a lot of both traditional as well as emerging financial service providers, have trouble, assessing credit risk. I mean, that's why we have a whole plethora of fintechs that are trying to say, okay, can we use alternative data to try and serve thin file clients? The problem is if you don't get that risk assessment right and you don't price the product right, then you do wind up
Correct.
with a lot of cases where you might overextend credit or even underextend
Yeah.
credit, and a lot of times that might look predatory, and it might, what might be predatory just might be inappropriate pricing and risk assessment and incompetence.
Could be both things. I mean, really depends on the situation. Thanks for the additional perspective as well. Let's move on to the next question. I think this question is probably for Huishi. This account here is asking, how do banks remain profitable? Business divisions want to make more money than sustainable. How banks really can consider ESG and strike the balance? I guess it's really a question of striking the balance between the desire to be sustainable and the need to be profitable. It might be a little bit similar to what I asked you earlier about whether sustainability and profitability are diametrically opposed. Do you have anything additional to add to that?
So, like any organizations, I think within the bank, we do have balanced scorecard, and that balanced scorecard is not solely based on profitability, right? It's also based on risk management. And that is why, like I mentioned earlier, we have corporate credit policies that looks at ESG risk and how we can reduce the ESG risk within the lending portfolio. So we try and balance, and because we bank the main economy, as much as we try and move companies towards on their sustainability journey, we do have to be cognizant that there is the part of the economy that takes times to shift and change. And these companies themselves, they provide employment from the social perspective. They provide employment, they provide even with fossil fuel companies, they provide electricity on our day-to-day needs. How do we actually make sure that as we transit, as we move these companies along, we make that delicate balance between their need to access finance, the need to support the economy, and the need to get onto the sustainability journey. So a lot of it also, we take reference from the government policies, for example, EV, that's trend and people are moving, and we as a financial institutions would have to support that movement by, for example, providing car loans to EVs, car loans to consumers who are after EVs. So it is understanding where the main economy is going, managing that pace, and as financial institutions, enabling consumers and business to access sustainable banking products so that they can get onto that journey.
I think in many ways, driving the sustainability movement is also in line with being profitable as well, right? Because, for example, I think, when you talk about mortgages or loans for properties, a lot of areas based on many climate models are at flood risk if we don't do anything to change the cost, right? And I think a lot of banks do have a lot of exposure in some of these areas as well. Thanks for the additional insight, Huishi. We are unfortunately short on time. Just have a couple of minutes before the session is over. So maybe we'll start with some closing thoughts from Inmoo, Kenneth, Paul, and then back to Huishi. Inmoo, any closing thoughts for us today before we end the session?
No, I think all of things we discussed so far, frankly speaking, to me, is quite critical, meaning that ESG at the very core of it. I mean, I look at some of the comments from the audience as well. I mean, there is a lot of mistrust, miscommunication that happen around ESG, that people there is we have developed some sort of the bad reputation around the greenwashing, around all these kind of things, which may be impacting the development of the ESG agenda going forward. But at the very core of it, ESG is actually lead to drive the environmental sustainability, which is actually benefit for the everybody and benefit for the economy. So I think what we just discussed, how we can actually stay, how can we do more education, how we can build more awareness, how can be more staying very focused on what we really need to achieve with ESG rather than focusing on the marketing agenda. This kind of thing really needs to come forward. Actually, the many players, including myself and the other panelists here, the other ecosystem players, it will be very crucial for us to actually work very closely together to make sure we can actually move this agenda going forward.
Certainly. Thanks for raising all these points, Inmoo. Moving on to Kenneth, your closing thoughts for us.
Yeah. Sorry. Yeah. So the closing thought is like we are always talking about investment and all that. So we are helping a lot of fintechs to present data more transparent, like the supply chain financing, omni-channel, and all that. So data aggregation, data transparency is very, very important. So so the good thought is how can we start and where can we start? Yeah. So this is in the system tagline, and data always takes start with the system.
Yeah, but as it is with anything worth venturing into, data is the core of everything we do these days, right? Yeah, thanks for that, Kenneth. Moving on to Paul. What are your closing thoughts for us today, Paul?
Yeah, I mean, I think, as an investment professional, I try to remind others in my industry that, investments as a discipline is constantly evolving. So if we look at, just early concepts of risk, so risk and return, it took the greater part of, 6 or 7 decades for some of those concepts to emerge, out of, business schools like Chicago, and about as long for there to emerge international standards around accounting. So, when I look at ESG, I remind investment professionals that integrating new levels of risk, new types of risk, is part of this evolutionary process of how the investment industry works. And we can't expect it to evolve whole cloth overnight. It is a long, slow, messy process, much like, finance and investment has emerged in the previous century. So, it is a critical, issues, I think, quite critical to the future of finance as we start tackling risks that we traditionally haven't really spent a whole lot of time thinking about. And it's going to take some time for, those sorts of standards and principles and definitions to coalesce around some sort of global consensus. So, as I said, it's here to stay. It's going to take some time, but I think it's quite critical to the future of investment.
Certainly. I mean, it's a journey and a process, and it's like they say, right? Rome is not built overnight. So let's hope for more progress as we move along. Thanks for that, Paul. Last but not least, let's move on to Huishi for some closing thoughts for us today. Huishi?
Thank you. And very good thoughts from all the speakers earlier. And I do want to inject a sort of positive vibe into others. There are actually many players in the ecosystem that are working hard to try and crack some of these challenges that we are facing. For example, with data, we have platforms that are talking about how to harmonize disclosure standards, how to have a standardized green taxonomy that can help in sustainable financing products. And we have MES with Project Greenprint that is also looking at enabling simplified reporting of data so that we can get people started on their journey. And we have COP that meets every year, and hopefully something good comes out of COP this year that enables us to progress under the next phase of the journey. So I think it is a journey, and it's a journey that I do recognize that we need to start speeding up. But there are many, many international stakeholders that are working on this to try and scale up and hopefully resolve some of these challenges facing the community in trying to make ESG an acceptable norm within the financial space. So let's stay optimistic. Let's play a part in trying to actually, uh, 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 yeah, making sort of ESG mainstream. Yeah.
Mm. Certainly. Thanks for that, Huishi. And I really enjoyed this panel. It's given me a sense of optimism to the future that sometimes otherwise look a little bleak sometimes. But I really appreciated the conversation we had, folks. Thank you for joining us today, and thanks to the audience for staying with us till the end. Take care, and until next time, then. Bye bye.